Hello everyone. This week, as well, I'll be sharing the latest financial market outlook. How will the markets move? Let's get started. This week's theme is Countdown to the AI Bubble Collapse. What exactly is happening beneath the surface of the AI frenzy? These forecasts are based on statistical analysis using data from the past 200 weeks of exchange rates, interest rates, and 17 other financial markets. But first, let's take a look back at last week's predictions. Last week, the Dow Jones Industrial Average reached the projected convergence point. Congratulations to those who were able to lock in profits. Now, let's move on this week's convergence points, in other words, the profit-taking targets. USD JPY is 152 yen and 58 sen. Euro JPY is 176 yen and 92 sen. AUD JPY is 99 yen and 89 sen. The Nikkei 225 is 48,558 yen. The Dow Jones is $46,763. The 10-year JGB yield is 1.77%. Gold is $4,097. We expect the markets to gravitate toward these levels. Review of last week. While the stock market rebound is driven by expectations of falling interest rates, caution is necessary. As mentioned last week, economic slowdown is what's bringing interest rates down, not the other way around. It is a classic case of confusing correlation and causation, a phenomenon often seen during bubble periods. Signs of an AI bubble: declining usage rates. According to the latest US data, AI adoption among large corporations has declined from 13.5% to 12%. Furthermore, an MIT survey revealed a shocking result: 95% of organizations reported zero results, despite nearly $40 billion in AI investment. Of course, some small and mid-sized companies are successfully improving efficiency using AI. However, it will likely take considerable time before massive AI investments translate into broad, economy-wide returns. Global disturbances emerging. Recently, unusual changes have been appearing around the world, including a sharp drop in Bitcoin and a sudden downturn in the UK's luxury real estate market. The high-end wine market has also been falling since peaking in 2024, with premium Bordeaux and Burgundy wines down more than 20%. Luxury watches, such as Rolex and Patek Philippe, remain relatively strong, supported by demand for tangible asset investments, similar to gold. Historically, bubble collapses often begin with markets targeting wealthy consumers, and the current situation fits that pattern precisely. NVIDIA's circular transaction problem. NVIDIA has been providing financing to OpenAI through a special-purpose entity, and OpenAI then uses that funding to purchase NVIDIA chips, a structure resembling circular transactions that raise questions about the quality of NVIDIA's reported revenue. In addition, NVIDIA's accounts receivable have surged, suggesting that corporate clients may be delaying cash payments, another concerning sign. At the moment, this is unlikely to cause immediate cash flow issues, but if the trend continues, it could place downward pressure on NVIDIA's elevated stock price. This week's market forecast. At the beginning of the week, the stock market will likely remain firm, heavily influenced by AI-related stocks, especially semiconductor names. However, the reason behind the rally is fragile increased AI investment driven solely by lower interest rates. The risk of an AI bubble collapse should not be underestimated. As for USD JPY, Expectations of a US rate cut in December and a potential rate hike in Japan make the yen more likely strengthen. Please note that all forecasts are based solely on a statistical analysis using a stable convergence model, and we take no responsibility for investment outcomes based on these predictions. That concludes this week's financial market outlook. We will continue bringing you forecasts backed by data and statistics. I hope to see you again next time. Thank you for watching.